Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Thursday, and we are looking at a very important day where we'll be looking at a couple of news events happening in the markets. And at the same time, price action is getting to catch on after having quite a sideways momentum for the first two. And for some charts, it has been 3 days of consolidation where the markets didn't have a very clear direction. So in this case, we will be looking to achieve some good momentum, and this could present quite a number of trading opportunities. So without wasting a moment, I would like to jump right in and look at the economic calendar. And from here, we'll look at the key important news for the day. And of course, we will be starting with what happened yesterday, early morning, and what we'll be expecting to see going forward. So first things first, yesterday, we had inflation in New Zealand rising by 1.1% in the second quarter of the year. And of course, for the annual inflation, it is still quite significantly high. So inflation in the UK slowed down to 7.9%, with a lot of pressure coming in from the transport sector. That is pressure to the downside. So with the transport costs easing, then we are seeing inflation in the UK going down. However, housing costs are currently rising. So for owner-occupiers costs, we are currently seeing them going on the upper side. And this is quite a challenge for the UK. Then for the Eurozone, inflation remained at 5.5%. And this is for the final CPI. But core CPI, on the other hand, went to the higher side from 5.4% to 5.5%. So the housing sector is cooling down in the US, with housing starts coming in at 1.43 million compared to an expectation of 1.48 and a previous reading of 1.56. Building permits were slow at 1.44 from an expectation of 1.49 and 1.5 million the previous reading. So it basically shows that the housing market is cooling off in the US, and this is consistent with the expectations of the Fed. So today, in the early morning, we saw employment change data where Australia created 32.6 thousand jobs in the month of June, compared to an expectation of 15.4K, of course, a previous reading of 76.5K. So this basically shows a quite resilient Australian economy. And of course, the unemployment rate dropped to 3.5% from a previous reading of the same, but the expectation was worse at 3.6%. So going on for the rest of the day, we had a trade balance coming from Switzerland at 4.82 billion Swiss francs. So this was higher than expected, but slightly lower than the previous reading. German producer price index basically came in at negative 0.3%. This shows that Germany is continuing to see disinflation in producer prices, and this could potentially impact the CPI on the next reading. So current account in the Eurozone came in at 9.1 billion, a very big rise, almost 3 times the previous reading. And remember, the current account is the difference between exports and imports. So in this case, it basically shows that the Eurozone is quite resilient. So we will be looking at EU economic forecasts as we proceed in the day. And the most important news for the day will be the unemployment claims coming from the US, as well as the Philadelphia Fed Manufacturing Index. So all these will be happening at 3:30 p.m. and you'll have more content affecting the euro and the US dollar towards the end of the day. We'll be looking at the consumer confidence data and, of course, existing home sales, CB leading index, and natural gas storage. So a majority of the momentum in the markets is expected to come in at 3:30 p.m. Just before the New York Open, and this will show us the job market activity in the last 1 week in the US. So in the previous reading, the US did 237K jobs. That's last week. And now, not created. These were the number of people who are claiming for unemployment insurance. And now we're expecting this number to rise to 239K. So the current reading will show us whether the job market is softening or whether it's tightening further. And of course, we'll be seeing the manufacturing index conditions in Philadelphia. So from this one, as you can see, it's basically a level of the efficient index based on surveyed manufacturers. And the neutral point is 0.0. So any number below 0 is indicative of contraction, and of course, any number above 0 is expansion. So currently, the Philadelphia Manufacturing Index has been contracting at negative 13.7 in the previous month, and this reading for June is expected to be negative 10.1. So in comparison, earlier in the week, we had Empire State Manufacturing Index, or basically New York. So in the previous reading, there was expansion of 6.6. We're expecting a negative, but in this case, we had 1.1, which is slightly above 0. So in this case, we'll be looking to see how manufacturing conditions are doing in the US. So the expectation is that if unemployment claims are rising, then it means that the job market is softening. And in that case, it would be quite positive, negative for the dollar. And of course, if the unemployment claims are much lower than expected, then it means a tight job market, which would be positive for the dollar. So for the manufacturing index, I would like to relate this mostly to the Dow Jones Index. So the Dow Jones Index is basically comprised of companies majorly in the industrial sector. So in this case, if a manufacturing index comes in slower than expected, then we expect the Dow Jones to be going down. And of course, if it's strong, then it should be quite positive for the Dow Jones Index. So that being said, we also know that last night, towards the end of the session, we had two big companies reporting earnings. So one of them was Netflix and the other one was Tesla. So Tesla continues to suffer as they cut prices in the last quarter. And this basically affected their revenues. You can see that Tesla has been cutting prices for their products. And Elon Musk promised to continue cutting in order to support demand for Tesla's vehicles. However, the big surprise last night was Netflix earnings, which basically beat earnings estimates. So Netflix came out with quarterly earnings of $3.29 per share, beating Zacks' consensus estimate of $2.83 per share. So this was a big surprise in the markets. And of course, for revenue, it was also a beat. So the quarterly report represents an earnings surprise of 16.25% a quarter ago. It was expected that this internet video service would post earnings of 2.83 per share when it actually produced 2.88, delivering a surprise of 1.77%. So over the last 4 quarters, the company has surpassed consensus earnings per share estimates 3 times. Netflix, which belongs to the Zacks broadcast radio and television industry, posted revenues of $8.19 billion for the quarter ended June 2023, missing the Zacks consensus estimate of 0.93%. So this compares to a year ago, where revenues were 7.97 billion. So the company has topped consensus revenue estimates 2 times over the last 4 quarters. The sustainability of the stock's immediate price movement, based on the recently released numbers and future earnings expectations, will mostly depend on management's commentary on the earnings call. So Netflix shares have added about 61% since the beginning of the year versus the S&P 500's gain of 18.6%. So with Netflix being up 61%, we'll be expecting a lot of volatility going forward. So we can already see the stock making quite some movement after the market close. So the stock closed at $477.59 as per last night. Now, as we head into another session in the US, which will be opening later in the day at 4:30 p.m., we will be expecting the price to open at a big difference, where in this case, it will be opening at 444.50. This is pre-market, which is basically 6.93% down. So the stock is expected to open with a gap down, which basically implies that the earnings were already priced in. So what this means is that the people who had already priced in, they were looking to exit during the earnings announcements. So in this case, after the exits, we saw the big drop in prices. So of course, we'll be expecting a strong recovery, especially considering that Netflix did way better than expected. So year to date, it's up 61.92%. So the pullback is very much welcome in this case. So as for Tesla, you can see that it was down 3.66% yesterday. So it's bound to open at $280.59 compared to yesterday's closing price of $291.26. So also another announcement that was largely priced in. So in the June 2023 announcement, you can see that earnings beat by 11.12%, and of course, revenue beat by 0.81%, basically implying that the company performed better than expected. So with two big companies showing a very strong earnings report, we know that the Nasdaq and the S&P 500 have been gaining over the year, and the major or the majority of the gains have come from the top 20 companies. In fact, for the S&P 500, the top 7 have been the largest contributors of the gains that we have seen in the year so far. So in this case, with Tesla and Netflix reporting positive earnings, then there's a good chance we will be seeing a rally happening in the Nasdaq as well as the S&P 500. So going into the charts, I think the key highlight for the day would be to start with the major companies that are, major stock market indices in the US and see what we could be expecting. So for the US Tech 100 or the Nasdaq 100, you can see that there was a big sell-off happening yesterday in the evening. And of course, just after midnight, this was after the earnings were presented. There was a gap downwards and the market has kept going back down. So this pullback is very much welcome. So remember, the overall consensus or the overall direction for the US Tech 100 is clearly bullish. So the fact that we are seeing this pullback happening here, it's only creating an opportunity for us to look for bullish positions. So remember, you always never want to buy the top. So whenever there is such a pullback, then you should be preparing to look for bullish position, since the bullish case is currently very strong. And we are seeing some of these companies report very good earnings despite having high interest rates. And of course, the inflation problem is gone, since from the last reading, we saw inflation in the US dropping to 3.0%. So the same case applies to the US 500. So there was a pullback, but now it seems to be quite resilient. So we are already seeing chances that it could start rallying during the London session. So as for the Dow, remember, as I mentioned, industrials, so they are showing a strong comeback here. So we could be seeing the Dow make an impressive rally for the rest of the day. So I'm very bullish on the three top indices for the rest of the day and perhaps through to tomorrow. So if something changes, then we will be communicating. So as for gold, it was a sideways momentum for a while. And then after that, you can see we had a very nice break towards the upper side, a consolidation, which was largely sideways. So yesterday, we didn't have much of a price action here, but then early in the morning, there was a good rally before a pullback, and the bullish case continues. So there is a good chance that gold continues rallying, especially after forming this inverted head and shoulder pattern. So since then, gold has rallied to the top of the pattern. So remember, the pattern had started here. So this is serving as a very strong resistance level. So the potential for the market making a pullback is also quite high. So as for now, I remain bullish on gold and I expect some further upward momentum. So remember, the last time we had such a pullback, the market made a very strong rally, and now we haven't even tested the previous high. So with the dollar index being really weak, then we could be seeing gold continue to rally. So the dollar index made an impressive rally yesterday, opening here and kept pushing higher before erasing some gains towards the end of the day. Today, early morning, started downwards, made a recovery, and it's more or less of a sideways momentum, down and then up, and we are back to the opening price. So perhaps the price action happening during the London session will give us some more direction on where the dollar is headed. And of course, for the European pairs, we are seeing the big sell-off continue. So after having the pound make a very strong rally, which lasted quite a number of days, I think this was 6 straight days going up, and now we have 4 straight days, and today being the 5th, where the pound is losing to the dollar. So in this case, the pound could continue erasing these gains. Remember, there is still more room to retest this area, and the area we are looking to retest is the previous high of 1.28462. So currently, we haven't hit that area yet. So there is a good chance we'll be seeing the pound continue to move back downwards to this level of 1.28462. So same case for Euro USD, but for Euro, after breaking this particular trend line, we don't have much happening. So if you were to adjust our trend line here, you'd notice that this is still a little bit different. But then for the last 2 days, you can see that the highs are now getting lower, which is indicative of a market that is losing momentum to the upper side. So in this case, there's a good chance we'll be seeing some form of correction happening in this pair. So after making a very strong rally that lasted about 2 weeks, now we are seeing sideways momentum with these 2 days moving completely sideways, a little bit high and then back down, a little bit high, then back down, and then a little bit high and then back down. So there is a good chance we could be seeing the euro attempting to go back to this level yet again. So as for USDJPY, we are seeing this form of consolidation happening. So it's more or less of a slightly bullish channel. So I would be interested in when the market eventually gets to the upper trend line, so that I can look for a trading position here. And of course, if it gets to the lower trend line, also I would be interested in looking for a position. So 140.19 seems like a key price level. And of course, this area here around 138.9. So if price gets to any of these areas, then I would be interested in looking for a position. But as per now, it doesn't look at all promising to look for a market entry. So USD CAD has been trading in this bearish wedge for the last 2 days, and a breakout is bound to happen. So chances are the breakout will be happening on the lower side. And if it happens, then the target remains the previous low. So I would be targeting this area of 1.30919. So the idea is to trade in the direction of the break. And in this case, the expectation is that the price keeps continuing with this swing and eventually gets to this area. So as you can see, the strong bullish momentum that happened last week is completely being erased. There was a retest here, and now for the last 2 days has been consistent bearish momentum, or basically the dollar losing to the Canadian dollar, and now the target is in sight. So for AUD/USD, we can see the big jump early this morning after the jobs data, and now the continuation is expected. So in this case, we have the previous high as a nice target over the next couple of days. So even pullbacks are being met with a strong bullish momentum. So by pullbacks, I mean the strong candlestick attempting to go back down here, followed by a green candlestick, and then the next candlestick is green. So there is a good chance we'll be seeing some upside momentum happening in this pair. So without a doubt, it seems like the UK oil market has been facing quite some challenges, attempting to go down and then attempting to go up. So all this is pretty clear for anyone. So if I zoom out here, you'll notice it's a bullish momentum for 1, 2, 3 straight weeks. Market pulls back towards the end of the week last week, and then this week attempts to continue pushing higher. And this basically tells us a story of a market that is consistently attempting to move higher. So in this case, after seeing the last 2 days being bullish, save for last night, there's a good chance we'll be seeing some further upside happening in this pair. So in this case, I would be very bullish in this pair, expecting that Brent oil would continue making higher highs as well as higher lows. And in the most recent price action, we are seeing Brent oil attempting to bounce from this bottom here, just as it did 2 days ago. So the fact that the market is attempting to break this level and is failing basically implies that there's a good chance we could be seeing some bullish momentum come from here and perhaps retest yesterday's high. So in this case, a very short-term intraday trade could be playing out here, and the market makes a strong rally towards this particular price here. And this is $80.74 per barrel. So as for the French 40 index, we have seen the retest happening here. So yesterday, the market went up, retested the upper trend line yet again. So after retesting, there was a strong rejection and price went back downwards. So today, the market is attempting to go back to the same level. So in this case, if you're on the bullish position, well and good. But then if you are not in the market yet, then this might be a very interesting area to be looking for a trading opportunity. So potentially a short selling position. So in this case, I would be observing this area closely around 7,380. So it's the same thing we are seeing with the UK 100, except that for the FTSE, it has already broken that level. And now we are attempting to continue seeing the rally. So 76.89 seems like a nice target for anyone who is bullish. But once the market gets to this previous high, then there's no telling whether it will continue in that direction. So perhaps it will be time to start looking for a short selling position in the opposite direction. So in this case, a very strong bullish momentum indicating a very resilient UK economy. But once you get to 76.89, then it's time to start looking for shorts. And of course, this has to be based on price action. So for now, the bullish momentum continues, and I expect this momentum to continue for the rest of the session. So as for the EU50, you can see the attempt to go up failed yesterday. So this was the attempt yesterday, failed, and the market went back downwards. And then in the last 1 hour, the market is attempting to go up yet again. And in this case, we know that the market is pretty clearly showing us that it's forming lower highs. So in this case, if it gets to this area here, then it's the area to start looking for short selling positions. So as per now, it looks like a bounce from support. So in this case, the idea is to continue trading what you see, and what we see here is a market rejecting the support and moving back upwards. So there is a good chance we'll be seeing some further upside happening for the rest of the day. So I'm checking on to see if there's any questions. Hello, can you touch on the basics of price action? I think I covered this in a very interesting thread that I just did on Twitter. So here is the thread. I'll be sharing this on the live comment section. So hello, Charles, Kevin, Vandy, good morning, and Joseph and Philip. So on yesterday's session, Norbert mentioned that banks have achieved their target on pound USD. So on further probe, he provided a link which I don't understand. How do you tell banks targets on assets? I don't know. I would have to go through that, through what he covered. But so far, I would say that pound USD is still very. The Bank of England continues tightening policy, and the Reserve Bank of the US stops hiking interest rates after the meeting in July. So we know that next week the Fed will be meeting, and they could be implementing the last rate hike by about 25 basis points. And once this happens, there will be no more rate hikes in the US. So as a result, we expect the dollar to start weakening. And by weakening, it implies that other currencies will be strengthening. So the Bank of England is not looking to stop hiking interest rates soon. Inflation is currently at 7.9%. So this is still a very big challenge. So this pullback in pound USD basically represents a trading opportunity to start buying the pound now. So after this sell-off that lasted 1, 2, 3, 4 days, and I think it's time we start seeing the pound make some form of recovery. And as you can see from the 4-hour candlestick that we saw here, it's indicative of a rejection of lower prices. So I will be looking for signs of bullish entry here. So clearly, after this rejection, there was a good rally towards midnight, early morning a sell-off, and now we are seeing this candlestick pushing higher. So if the candlestick was to close equal to this red candlestick, if it closes at that level, then it would be an indication of entry by buyers, and I would be very much honored to go for a buy position. So in this case, I expect the pound to be really strong, especially in this quarter and perhaps the last quarter of the year. So I don't have that bias where I could be expecting the pound to be losing to the dollar. So all fundamentals indicate that the pound could be very strong against the dollar in the second half of the year. So do you need a stop loss for long-term trading? Tradings that run for days or even months, how do you ensure news on high volatility does not blow your account in long-term trading? So if you're a long-term trader, I would assume you're talking about positional or swing trading. In that case, it depends on your leverage, and of course, it also depends on your entries. So if you're trading on low leverage, let's say 1 to 5, 1 to 10, then you're able to set a very huge stop loss that is quite distance from your entry point. And at the same time, you can even trade without a stop loss, but that would be quite risky for your account. But then, on the other hand, if you're trading a highly leveraged market like Forex, like indices, like commodities, then it's absolutely important to have a stop loss at all times in your trades. So what you do is to find the right timing. So if you're trying to identify a swing, an extreme price level to make a market entry, then I would suggest that you always to use a stop loss, but be very careful about your entry points. Nice work. Thank you, Dantech. Hi, Christine Karimi. Welcome to the session. Can we focus on jobless claims and Philadelphia Fed data to bring volatility on USD pairs? Yes, that's exactly where we're expecting the volatility to come from today, 3:30 p.m. Explain gold, please. Can you repeat the analysis for gold? I think I've already covered that. Do you encourage scalping? No, I don't. Hello, kindly look at the USDJPY. Let's look at that. So first things first, it's quite clear. There is a strong directional movement. Price is well on course to get to the upper trend line. Of course, using this high and this other high, you can see that there is an upper trend line. So clearly, price is destined there. So there's still some more room for this upside. So if you're doing the trade, then this should be your target area around 95.997, which is basically 96.0. So for now, I don't know much about the pair, but from the price action, it's pretty clear that the market is headed here. So there's a very strong momentum on the H1 chart, and now the price is testing a key level. So if you are not on the trade, then this is not the right time to make an entry. So whenever the market is approaching such a resistance level, of course, you don't want to be there. So what you want to be is patient and liquid enough such that if there's a clean break, then you can be able to trade the momentum upwards. So if there's a clean break here, then you trade here. And of course, if the market rejects this resistance, just as it did the last two times, then in this case, you start looking for potential trades towards 94.265. So the request on gold, as I mentioned, there was this trend line. The top of the trend line is here. This is where the trend line started. So there's 3 instances where there's resistance and the market was unable to break this resistance. So after trading downwards, and this is the 4-hour chart, gold comes in and forms an inverted head and shoulder, which is basically a trend reversal pattern. So immediately it breaks to the upper side, consolidates for a while, breaks to the upper side, and gets to the resistance. So the first instance, it gets to this previous high, it's rejected immediately and price pushes back downwards. Then today, early in the morning, price goes up to the same level, breaks the same level. Remember, broke yesterday's high, pulls back down, and now in the current hour, it's displaying signs of bullish momentum. So in this case, the expectation is that eventually gold breaks this level and establishes a new impulse towards the upper side. So in this case, if there's a high impulse, if you look at the previous prices and try to identify a key price level, I think the only logical area is around here. And this is just a very psychological price level, which is often the 2000 price level. So this is usually often on the news analysis. Every time an investor is trading around this area, it's either a target or a stop loss. So in this case, there's an expectation that gold breaks this area here, and eventually that is to the $2,000 price level per ounce. So that's what everyone is observing. Of course, there could be a potential where gold pulls back to this level here. So if it pulls back to 1973, well and good. But if it breaks, then the idea is to go for the 2000 price level. So apologies, today we have overextended the session, but hopefully everyone was able to learn something on this. I would like to tell you that we normally have another session today at 8 p.m. So if you're available, we'll be doing more content at 8 p.m. where we cover more ground and try to have a bigger outlook on what to expect next week and to understand what happened this week. So is there a specific strategy for trading news, or rather how do you trade news? So I'll be answering that question later. Just a kind request, I'm new to trading. never traded before, but I have read widely and been following on all your videos and even subscribed to your channels. Kindly guide me. So I'm hoping that you have gone through the Novice to Pro series. So we have a series called To Novice to Pro. It's available on FX Pesa YouTube. It's 10 episodes. It basically covers the intro all the way through to trading like a professional. I would highly recommend you go through the 10 episodes, practice, and then join these sessions. So once you join these sessions after you have gone through that course, then you'll be able to understand the analysis that I do on these sessions, and it will help you guide on identifying trading opportunities for the day. So for today's summary, I would say the chart of the day seems to be one. Just a moment. Brent oil. Brent oil seems like the chart of the day. I would be without a doubt saying that this seems like the most promising chart of the day, having seen this support tested a couple of times, and now the market is just bouncing off the same support, basically indicating a value area where the price is expected to continue moving in that particular direction. So thank you guys, and I hope to see you on the next session.